Guys, in this video, I'll be talking about again ratio analysis. Here, ratio analysis is with regard to debt to capital employed ratio. Capital employed ratio, sorry, for the capital employed, I have discussed in the last video that how it is to be calculated. For the calculation of capital employed ratio, I have given you a clue that you can prepare a T form balance sheet as we used to prepare in sole proprietorship or in the partnership firm in your working notes to calculate the amount of your capital employed. Capital employed is calculated from both side, liability and asset side. Let's see how to calculate it. First of all, for the given balance sheet of your company form of organization, you have to keep in your mind for the balance sheet there are three settings on your liability side: shareholder fund, NCL and CL. And on the asset side you have NCA and CA. What is NCA? Non-current assets. CA, current assets. CL, current liabilities, non-current liabilities and shareholder funds. For the shareholder fund, we are provided in the question equity share capital and profit and loss account. So equity share capital was of 8 lakh, profit and loss account was of 2 lakh. So the total sum we got from here for the shareholder is till 10 lakh. Then NCL, for that we were provided 9% debentures, that is 5 lakh, that is our debt also. This 9% denotes its interest rate, so we will take only the value, not the interest, right? Now current liabilities were 1 lakh, which we portrayed here. Now non-current assets were totaling 13 lakh and the current assets were 3 lakh. The total of both the sides were 16 lakh. That asset should always be is equals to the liabilities, so the both the sides total was equal. But for the non-current assets, it were telling us that it includes deferred revenue expenditure of rupees 2,50,000. So this deferred revenue expenditure which was there in the value of non-current asset is not to be included for the purpose of calculation of your capital employed ratio. So for the calculation of capital employed ratio, we have shareholder fund plus NCL minus deferred revenue expenditure. If we start from the asset side, we have NCA plus CA minus CL minus deferred revenue expenditure. Okay, so we got a value. If we start from here, this is like 15 lakh minus 2 lakh 50,000, a total value of 12 lakh 50,000. And if we start from the asset side again, this 13 lakh subtracted with 2 lakh 50,000 plus 3 lakh minus this 1 lakh will give you a value of 12 lakh 50,000. You can make use of any of these methods. So we got our capital employed, we had our debt, so the debt divided by capital employed, we got our value that debt is zero point 0.4 times of your capital employed in this given question. So this is the way you can calculate your capital employed by taking the balance sheet in the T form. But keep in mind one thing, that this whole point is your working note. This is not to be presentable in the fair work. This whole point is your working note to make yourself understand the concept of your balance sheet in the T form to calculate capital employed. Thank you, Accountitude. Keep scoring, like, share, and subscribe to my channel.